All right, so we're watching the Dow because we know it is involving your money. The market's reacting to new job data following a roller coaster week on Wall Street. And you can see once again at this hour, we're in negative territory. President Trump's swerving trade policies have a lot of investors on edge. So the Dow is down more than 3% over the week. The NASDAQ now officially in correction territory. And as questions really swirl over what it all means for you, the American public, and American businesses, economists say today's job data really points to signs of a slight slowdown in the labor market. So let's talk about that. Let's bring in CBS News MoneyWatch correspondent Kelly O'Grady. Kelly, watched you on CBS Mornings, learned a lot today. For our audience, what does this data point to?
So the jobs report today, I think there was some relief, to be perfectly honest, from investors and economists, not necessarily reflected in what's happening in the market right now, but it was a slight slowdown. So we were looking to add overall 170,000 jobs. It came in at 151,000. The unemployment rate ticked up to 4.1% versus 4% last month. Not a lot of movement. So what that tells me is the hiring picture, the open roles that companies are adding didn't fall off a cliff. It remained pretty steady. I think what is important, though, is this number does not include most of the Doge layoffs that we're seeing. It doesn't include probably a lot of the consumer sentiment, the pullback in spending that may ultimately impact companies and the way they're thinking about hiring. And I put this number in context with a report that we got yesterday, which was about layoffs. So the one that we're talking about today is hiring. The one yesterday was layoffs. That really saw a huge spike versus last month, 245% increase, the worst that we've seen since midsummer of that first year of the pandemic. And so I sort of put this two together of today was a pretty good number. We're slowing down slightly, but it's really going to be these next couple of months where we see have companies change their minds with tariffs, with consumer spending pullback, with that sentiment just having a lot of anxiety in the ethos. So I guess the tea leaves are we're okay, but there's some anxiety about where we may be going, Reed.
Well, and some of that anxiety could very well be rooted in Trump's on again, off again policies. Rattled Wall Street. Of course, we're talking about the tariffs and the uncertainty. If that continues in our nation, are we seeing that this could perhaps be a test of what the president's policies are over the next, 2 months, 3 months?
Well, and I think that uncertainty, that question is really why you are seeing so much volatility in the markets, because people are trying to read the minds of the president. And it's very difficult right now because one day tariffs are on, the next day there's a pause, this country, that country, when the deadlines are happening. And so it is unclear whether this is something that is going to be long-standing, that we are going to be living under these tariffs for a while, or it may be a negotiation tactic. And I bring it back to the piece about the job market. These companies are having to decide without a clear picture of what the tariff landscape is going to look like for the next year, of hiring decisions, of layoffs. You know, are their costs going to go up and they need to make adjustments in other areas? So it's not just investors and consumers that are seeing this picture and going, do I buy, do I sell? But it's also businesses that are making major decisions without a lot of insight to what that picture is going to look like.
Well, and relative to that temporary pause in Mexico, we know that we're looking at an April 2nd date to where those tariffs could very well go back into place. So we know you'll be watching it. April 2nd is not too far away, Kelly. Neither is the weekend. We hope you have a good one, my friend. Take care. Thank you so much.